Welcome traders, this is Mike Hamilton from Trade Easy Way, and I don't often get the chance to show you my accounts. I just go through this. I opened a small account with this brokerage called Santander Direct, of which I am a director, and it's a small account and I'm using it as an experiment to see how fast I can grow a small account. So you can see here we have a balance of 1575 and you can see we have a profit of 758. So 758 of this figure here is just pure profit. I've only been operating this account for 6 trading days. I've not been trading every day of that 6. But this is the last few days of trading. These are trades on Thursday. I did one trade on Friday, which is the pound. I'll talk about why I took that trade in a minute. And then these are a few trades on euro, pound, etc. Notice how it's 12 trades here, and of these 12 trades there are 1, 2, 3 losses. So there's a 75% success rate. Small profits, small account, small profits, not risking too much money. Treating this leverage that I got in this account with great respect, and just trying to slowly grow this account. Over a 6-day period, I've nearly doubled it. So if you take, I started with 800, it's just under 1600, so I've nearly doubled it in 6 days. All right, so small losses and bigger profits. I was going to say big profits. They're not big profits. They are bigger profits. All right. So in the meantime, this account has this chart package. This is the chart package that comes with it, which I think is really smart. You can trade off the charts if you want. This is what I've been doing on the pound US dollar on the daily chart. I started buying this key support. You can see this huge level of support here. So that trade I did on Friday afternoon was buying that low into Thursday's close. So I took it off, didn't want to hold it over the weekend because it's a small account, didn't want to risk any nasty gaps. And then on Monday started buying the dips and then took it into this resistance level. Fed day tomorrow, so it could get very whippy and it could go either way. It's a huge amount of resistance. We've not closed. Had we closed above it, I would have held, but we've not. We kept bouncing off it a couple of times. So I decided to take what I had and then stand aside, and we'll get Fed day out of the way. You can see if I mark this up, if I can find the right line. So you've got this support underneath us, this resistance above. So we are in an apex. Whichever way we break out of this, whichever way we break out of Friday, Monday's low, and today's high is going to be the direction, I think, into August and potentially the autumn. So if we break under 154.50, I think we're going to roll over, going to wind our way down. If we can hold this apex and then start closing above 157, I think we can at least go to 158, 160 and so on. So that's why I've not held, and happy to wait until Fed is out of the way and see what they want to do with it. In the meantime, I just want to show you A, my account, and B, this package, this chart package. It's called santandirect.com. So it's sand as in the beach, ton, T-O-N, santandirect.com. I'll give you the link. Very nice, really, really tight spreads. I think the pound is something like 0.2 for the spread. It's very, very tight, and it's a great chart package. Okay, if you're a UK spread better, then this isn't for you, and you definitely want to spread bet, this is not for you. If you are like me and you pay tax on your trading, then this is a great option. You see the channel we're in here, it's a funnel pattern. That's why I'm concerned about us potentially coming down out of here. Alright, well, we stuck to the fibs very carefully. This was the support level I bought on Friday. This was the pullback I bought on Monday. Traded this wave on yesterday. Traded this pullback once the data came out. And then bought a little move into the US. And took it off because it just didn't hold. Alright, so I just thought I'd show you my account, show this chart package, and now let's just do a quick whiz through the charts. DAX, very similar to how the Dow is performing. So here's the big move up from last December, and ever since we hit March we've been selling at the highs. This time around we've come off the 38.2% fibs, we come down to the 78.6, and we are sandwiched right in the middle. This is typical of a Fed day behaviour to me. As we get, the markets will want to stay at a sort of central pivot level and then decide whether they want to go from here. And you can see this gap here. So this chart package just notes the trading sessions isn't continuous, so it picks up the gaps, and you can see yesterday we successfully closed the gap, and within a hair's breadth we touched that fib level. Very, very precise drop to that fib level and a gap fill. So I'm standing aside of this one and then see where we want to go. Obviously if we break 11,000 we are heading south. If we break today's high, and particularly 11,325, this could be heading back up. Where do I think it's going to go? I think we will potentially retrace to the 50%. As long as the market likes, doesn't matter what is done at Fed Day, just what does matter is what the market does. And if the market goes back and closes above 11,325, i.e. this fib level, then I think we'll at least go to 50% and potentially retest those highs. Break 11,000 and we are heading potentially all the way down to the 127 at 10,150 to the 161 extension just under 95.50. And you can see why I like the fibs and why you need to be monitoring what the fibs is doing. Moving on to the euro, and you can see again it's a very, very neat fit with the fibs. At the lows we just came down to these lows down here, which was May, about middle of May. So once we sold up, so a lower high here, wound our way down in this channel, but when we breached the channel we hit the 50% here, and now we're just sitting on the 61.8. So I think you know what I'm going to say. If we can hold above 50%, we're potentially going to recover into these fib zones here, break this low and can't hold, which is 110, then we are potentially going to wind our way down, and who knows, maybe even come and find parity. But like I said, nice neat chart package, and you can see the 161 extension is down here, which picks off this low. Alright, so that's the euro. Moving on. This is the US dollar CAD on a daily chart with the fibs. And you can see from this range here, and this range here, we have come up to the 127 extension and we've closed underneath it. However, we have not closed under this 1283 area here. So again, whichever way we come out of this direction here, we could potentially go and visit 1339 or 134, or we could start to wind our way down to some of these levels down here. If it does fall, I would expect to see, the next level I expect to see was 12650, 12650, 127, this sort of area here. Alright, so basically all I'm doing is I'm just now waiting until the Fed day is out of the way. Typically the run up to Fed day and the run up to the announcement can be very choppy. So I will be in the room in the morning as usual, 8 o'clock, but it's possible I may not take a trade. I'll see if I can get a small move, but not looking for any major directional move until we get the Fed out of the way. Okay, well, thank you very much for joining me, and if you want to come into the room, then drop me a line. If you're interested in a great chart package, a great platform, it's Santon Direct, and I'll send you a link. All right, thanks for listening, and bye for now.